Okay.
Think.
Just started, right?
Yep,
Okay.
perfect. Okay, so good afternoon, everyone, and thanks for joining us today. My name is Alexandra, and I'm the Money Counselor at the Mo Money Financial Literacy Resource Center. We are part of the Financial Assistance Department at Mohawk College. And so we are pleased to present today to you guys about how to pay for your post-secondary education. So this is the agenda that we're going to cover today. First, we're going to focus on the different many ways that you have to pay for your post-secondary education. Then we're going to focus on specifically the government student loans. So that's student financial aid. And then we're going to talk about how to repay your student loans. Because it's important to kind of, when you apply for loans, that you know how to start paying and when you have to start paying the loan. So those are the three main topics that we are covering today. So the first topic is how to pay for post-secondary education. So we're going to talk about the costs, the different payment options, and the plan. That third topic is going to be covered in detail in a second session, but today I will give you a couple of ideas about how to make a plan to go to college or university. So now let's talk about the cost. I know that you know how expensive post-secondary education could be, but you can see here some interesting information from Macklin's magazines. So they're saying that on average, annual cost of post-secondary education in Canada is around $19,500. So that's between tuition and fees. You have to buy books, and you also have to pay for living expenses such as rent or groceries or eating on campus, transportation, and having fun, like we have like alcohol or going out with friends or some extracurriculars. And so those are kind of the main thing that you spend money on. If you see rent and tuition are almost 74% of the total amount that you have to pay when you go to college or university. Also keep in mind that the house prices are they are increasing so much lately, so rent is likely going up. So you need to factor all those costs when you are making a plan. So according to Statistics Canada, the average Canadian university graduate with around $26,000 in student debt. So when you are planning for post-secondary education, as I said, you need to consider the education cost. So this is what you see in the left side of this slide. So it's tuition, all the other fees like bus pass or gym membership or health and dental coverage, and some optional fees. So some of these fees are mandatory, some of them are optional. So you can, for example, the dental, you can opt out the dental if you have benefits through your parents, or if you are working, if you have benefits, so you can opt out the dental. But the majority of the fees are mandatory. In addition to paying tuition and fees at the beginning of the semester, you also need to buy books or some equipment, like you need a new laptop, or if you're going into like photography, you need to buy a camera, some equipment that you need. Normally, the college or the university will ask you for a tuition deposit. And it's important that you know that the tuition deposit is not covered by OSAP. We will talk about OSAP later, but the tuition deposit, normally you have to pay the deposit. And at Mohawk, the amount that you need to pay is $250, but that can varies depending on the college or the university you are going to. And then the second type of cost that you need to consider are the personal expenses. So this is basically your living expenses. As we were seeing in the past slide, you need to pay rent if you're gonna live in the residence, or if you're gonna live with friends, like having some roommates and pay for rent in an apartment. You need to pay for utilities, heating and electricity. You need to pay for food, clothing, toiletries, your cell phone, internet, cable, transportation. If you have family, then you have to pay for your children and family expenses. Also, you need to include entertainment. If you need any type of insurance, for example, tenant insurance, sometimes you have to pay tenant insurance. And if you drive your own car, then you need to consider the car insurance. So now let's review the different payment options that you may have to pay for school. So we have government student financial aid. So we will talk about OSAP in detail in the next section of this presentation. Another source of income when you're going to university is awards, and I will explain all of them like in detail. You can also use savings like in your RRSP or tax-free saving account on RESP, and I will explain them as I said. You can also use your own savings if you are working, or like over the summer, or if you are like saving when you receive a present from a family member. Any type of money you receive, you can start saving up. You can also get a student line of credit, family support. Sometimes your parents or another family member can offer to support you with your college fund. I have here the campus student employment program. Most universities and college have this type of program. So this is basically for you to work at the college or at the university. So it's good for you to find out. We have a great program that is open every semester at Mohawk. So you can apply and get hired to work in the college, which is great. So you don't have to pay transportation to go to a different place. And you can work in some areas that are related to your program. So for example, right now we have a graphic designer student helping us with some social media graphics and designing for us some pieces that we needed. So yes, you can find a job within the college in your area of education. Also, you can work at the same time that you are going to college. You can have a part-time job or like a self-employment income. There are some other like government assistance. For example, you can get Ontario Works, or you can get Ontario Disability or ODSP. And you can also get some government benefits. You need to file your taxes to be able to receive those benefits like Ontario Trillium, GST, HST, Climate Action Incentive. So let's talk about each one of them. I'm not going to spend a lot of time on the government student financial aid because Deb is going to explain this in more detail. But you just have to apply. In our case, is OSAP in Ontario. Both part-time and full-time students can apply. The interest rates are lower than student line of credit. And while you are in school, you don't have to pay anything. You don't have to pay interest. You don't have to pay the principal. You have to start paying 6 months after graduation, or if you leave the full-time education or the part-time, then you have to start paying. But as I said, Deb is going to cover OSAP in detail in the second section of this presentation. So now let's talk about awards. So there's 2 types of awards: scholarships and bursaries. The scholarships are awarded to students based on academic merit, athletics, volunteer experience, or other type of achievements. The bursaries are awarded to students who demonstrate financial need and meet some other specific criteria. So I would say most universities and college have bursaries and scholarships based on the high school marks. So sometimes at the beginning when you apply, they give you like an entrance. Automatically they will provide between 1,000 and 4,000 to some eligible full-time students that have an average of 80 or more in high school. So that's a really good one to start your program. That's sometimes just a one-time award when you start your program, but then you can apply every semester, and I always recommend the students to apply every semester, because sometimes your situation changes, and if you don't get approved for this semester, for the next one something may change and you can get approved. So normally every school has like a portal like this one. This is Mohawk's website to apply for scholarships and bursaries. One great thing that Mohawk has is that you just have to apply once, create a financial profile, and our awards officer will match you with the best scholarship or bursary depending on your specific situation. Because normally some other schools and universities, and I know this firsthand because I have my son studying at the University of Guelph, so it's completely different. You have to kind of go into their website and search all the scholarships available, and you have to do the job of like finding out which one applies to you. And then if you are eligible, then you have to apply for that specific scholarship. At Mohawk, we have a really nice process where we match you with the best scholarship that applies to your specific situation. You can also use some of these websites that are really good. Scholarships Canada, Iconic, and University Study. Those are some companies in Canada that can help you to find the best scholarships and bursaries available for you. We can send you the links later through Sarah, so you can have the information. But always check first the college or university that you are going to start your program in. And then if they don't have anything that applies to you, so search one of these websites. I'm just gonna briefly explain what you need to do. In general, every university or college may have a different process, but in general, you have to write a letter, like it's not a formal essay, but it's like a letter where you're explaining why you think you should be awarded. Where you just share about your life, who are you, what program are you in, what are your hobbies, interests, how can you feel that you can help the community with your program. This is very important. So always organize your thoughts, identify your goals, and consider your community when you're writing the letter. Obviously, proofread the letter, um, and use some of the tips. For example, we have some tips at Mohawk. When we say, okay, tell us about yourself. What are your hobbies, your interests? What program are you taking, and why did you choose that program? Why do you feel that you deserve an award? And what do you hope to achieve with your education? What are your greatest accomplishments, or what are you proud of? And how are you involved with the community? Describe your volunteer work. How do you go above and beyond for others? So those are some ideas on how to write a nice letter that is gonna help you to get approved. So just practice writing the letter, proofread it, and just make sure that is a good letter. Then you also have to prepare your budget for the semester. We will be talking about budgeting more in detail in a second session, but just consider all the income sources that you have and the different expenses that you have to pay. The one-time expenses such as tuition and fees, and books or equipment, and obviously also the living expenses or the monthly expenses for the semester. Then when you are ready, you just need to complete and submit the online application. And I always recommend you to keep an eye on your email, because sometimes we need some additional information for you. So it's good to keep an eye on your email just to make sure that you reply on time to any type of request that the college may have before approving you for the scholarship. So another option are the government register accounts. So there are actually three accounts, but in this slide I'm going to speak about the tax-free saving account and the registered retirement saving plan. So for both of them, you need to be 18 or older. You need to be a Canadian resident, and you need to have a social insurance number. So those are really good accounts to start saving money and avoiding the taxes, so you don't have to pay taxes. With the RRSP, you have to pay the taxes when you take the money out, but there's a program, and let's see the next slide, where I have like a comparison between the two of them. So the RRSP is Registered Retirement Saving Plan, the tax-free saving account, the TFSA is tax-free savings account. The primary purpose of the RRSP is saving for retirement. And the tax-free saving account is a general type of saving, any type of savings. What about the taxes? So when you put money in an RRSP, the contributions that you make to the RRSP are tax deductible. So that will help you to reduce your taxable income. This is when you are working and making a lot of money, so you can make some contributions to the RRSP. The tax-free saving account, the contributions are not tax deductible. But when you take the money out, you don't have to pay taxes. When you take the money out of the RRSP, then you have to pay taxes. And normally the financial institution will withhold the money for the taxes. There are some limits to contribute to the RRSP. Normally the 18% of the previous year's income, up to $30,780 for 2023. The TFSA, it depends on your age. Every year, the government allows you to contribute up to certain amount. In 2023, $6,500. Right now, the amount that you can contribute since the program launched, this program in 2009, is $88,000. But if you were not 18 years old in 2009, so it doesn't count. You have to just count since you turned 18. There are some limits for the age. For the RRSP, you have to stop contributing to your RRSP when you turn 71. For the tax-free saving account, there's no limit. If you take money out of the RRSP, as I said, it's going to be a withholding of taxes, and the money you withdraw is going to be considered taxable income. The TFSA, there's no penalties, and withdrawals are not considered taxable income. But one good thing about the RRSP is they have a couple of programs. One is the Home Buyers Plan, and the other one is Lifelong Learning Plan. So that means that when you're taking money out of your RRSP to buy a house or to pay for education, you don't have to pay taxes. That money is going to be free of taxes. The only thing is the government is going to ask you to save the money again, but they will give you like 15 years to save the money again, because that money is supposed to be for retirement, but they allow you to take it for first-time home buyers or lifelong learning plan without taxes. Another really cool account is the RESP, that's Registered Education Saving Plan. So ask your parents if they have an RESP open for you. Normally, your parents will open the account and they will start saving money for you, and the government will match 20% of what your parents are saving. Up to $5,000, which is great. That's free money from the government. There's another thing called the Canada Learning Bond. So you also can apply for that. You need to open the RESP. And one really good thing that is new because it just started in January 2022. So if you are between 18 and 20 years old, you can apply for the Canada Learning Bond and you can get up to $2,000. So it's really good. If your parents don't have an RESP and you are between 18 and 20, I recommend you to go to your bank, wherever you're banking, and open one RESP, because that will give you some free money from the government. For tax purposes, you need to pay taxes for the educational assistance payment. So the money you're getting from the government, you're gonna have to pay taxes, but normally is the beneficiary of the account paying the taxes, and it's normally students that are not making a lot of money. So at the end of the day, you're not gonna be paying taxes for that money. Another option is the student line of credit. So you just have to apply. Sometimes you're not eligible for OSAP because of your parents' income. If they have a really high income, so you're not eligible for OSAP. So you can go to your financial institution and apply for a student line of credit. That is, normally they will ask your parents to be your cosigner, and then you will have some money that you can withdraw when you need the money, and you don't need to repay the principal while being a full-time student, but the bank will ask you to pay monthly the interest. That's a big difference between the student line of credit and the OSAP, because as I said, with OSAP, you don't have to pay anything while being in school. You don't have to pay for the principal or the interest. But if you get a student line of credit from your bank, then you have to pay the interest on a monthly basis. As soon as you finish your education, they will normally give you 1 year. Some financial educations like RBC will give you 2 years after finishing studies. Then you have to start repaying whatever balance you have outstanding, because they will give you a limit. For example, $40,000, but you don't need to use all the money. You just take whatever you need. And you have to be very mindful on how are you using that line of credit, because you don't want to graduate with $40,000 in debt if you don't really need it. So just use it to pay your tuition and fees. And if you need to use some of that money to pay for your basic needs, but be mindful on how to use that student line of credit. Then you can also use your savings. Just start saving as soon as you can. If you're working over the summer, if you receive any type of gifts from family members. So just open a basic savings account or even the tax-free saving account and start saving. That will help you to pay for your post-secondary education costs. Another sources of income, as I said, can be like monthly income or recurring income, like family support. Your parents can say, okay, we're going to give you $200 a month or $300 a month to help you pay your living expenses, or if you find a job within the college campus or the university campus, or if you find a part-time job, or you have any type of self-employment activity, or you can get the government assistance or the government benefits. So those are the different sources of income to help you pay for your education. Then the last thing is making a plan. As I said, we're going to be talking about this in a second session in detail. This is about budgeting. This is how you need to obviously determine the cost of your education, the one-time cost, and the monthly or recurring expenses, and obviously determine the different sources of income you have available, and then is how to balance the income and the expenses. So we will talk about that budgeting skills in another session more in detail. But I wanted you to know that it's important to, after you understand the income and expenses, how to make a plan and how to plan ahead for all the expenses that you may have as a college or university students. Now I'm going to pass it over to Deb, and she's going to explain to us a little bit more about OSAP and the repayment options as soon as you finish your education, or as soon as you decide to drop off college, if that's your situation.
Thanks, Alexandra. That's wonderful. So the second topic, as Alexandra said today, we're going to cover is OSAP and government student loans. And most students will have an OSAP loan. It just seems to be, as a student, most of them borrow money. So so what we're going to cover is OSAP and how it works, what your repayment options are, and the strategies for high or low income. So that's what we're going to cover in this presentation today. So if you, most people will graduate with a student loan, so you're not alone. You're in great company. Um, Across Canada, 82% of college students depend on government loans. And in Canada, we're very lucky because we have a pretty coordinated system. And the thing is that I think it's a 73% of Mohawk students rely on OSAP. And the average debt at graduation tends to be about 15,000. So it's not huge, but it is something that you have to consider, and you will end up paying back. So just going to the next slide. So with OSAP, which is the Ontario Student Assistance Program, you complete one online application, and it's really important that you apply early. So if you're planning to go to school in September and you have your acceptance letter, apply as soon as possible. So you will automatically, when you apply, be considered for a loan, which is money, of course, that you have to repay. But there also is a grant portion of the student assistance program, and this is money that you don't have to repay. And it's important to note that OSAP is there as an assistance program and not to cover all your expenses. I know that a lot of students apply and they're shocked that they don't get enough to cover their rent, their books, and their tuition and their living expenses, because really it's just to sort of help. So keep in mind, if you have a secondary source of income, like working part-time, or you've got some savings, you will probably need to use that. So you also you can apply for the loan and the grant, but then you can only, if you look at it and you decide just to take the grant, you can do that and not take the loan. So there's always that option, and you should apply for both. Then in terms of eligibility, so OSAP is based on financial need. So when you apply for OSAP, it looks at your education and your living expenses, and if you have dependents. So all of those things are factors in terms of your eligibility. Um, and then they kind of consider if you're a full-time or part-time student. The school that you're going to must be approved by OSAP, and the program that you're looking at studying in also is, it determines eligibility. In terms of yourself, you need to be a Canadian citizen or a permanent resident or a protected person. So just to note, a permanent disability as defined by OSAP is a functional limitation. It could be physical or mental, but it restricts your ability to perform daily activities necessary to participate in studies. So they do have some pretty strict criteria. And also protected persons are refugees, convention refugees, or humanitarian protected persons abroad. So those people in those situations are also eligible. So we'll go to the next slide. And then, so how do I apply for OSAP? And like I said, you apply early, give yourself a lot of time, because during the pandemic, there was a lot of delays in terms of people getting their money. So the earlier you apply, the better. When you've made that commitment to go to school and you know that you're going to apply for OSAP, do it early. So there are a lot of things that that you need to consider when you're your expenses for education. You've got to think about your tuition, your residence, your food, your rent, your fees, traveling, all your personal self products and those kinds of things. And there are registration fees. So all of those things you have to think about when you're applying for OSAP. And it's good to do, sort of have it all in one place so that you can go through the application quite easily. So you get your loan, you can apply every semester because they give you OSAP by semester. So if you're taking a 2-year, 3-year program, you're probably going to have to do a lot of applications to OSAP. And then comes graduation day. And as Alexandra had sort of said, you have up to 6 months before you have to start repaying, but you do have to repay the money. So there are repayment options that you need to consider. And this might seem kind of a little premature for you because you haven't, if you haven't even considered applying, but it's important to understand that paying back OSAP is a process. So as soon as you apply for OSAP, you start it's sort of a national student loan service center, and then you establish an account with them. So you need to kind of be always like any account, you have to keep those up to date with your emails, your phone number, that sort of thing. So this center will reach out to you via email to talk to you about your 6 month non-repayment period, and then how do you want to pay for it. Some people choose if you have any kind of lump sum that you can put on the loan in advance of starting your monthly payments, always way better to do that because you won't have the interest rate on that bigger lump sum that you put down. So anytime you can put down a lump sum, that's wonderful. Once you receive sort of the email from the service center, you'll be able to choose how to make your payments and how much you're going to pay each month, and how much and the date you want to make those payments. Most students or most graduates choose a date where they will either be getting paid or know that they'll have money in their bank account because it's usually automatic withdrawal. So that's always the best way to do it. And then it's kind of just comes out automatically. Um, you can make arrangements to pay on a weekly or bi-weekly amount, but that's kind of gets a little, I mean, it certainly reduces your interest that you're paying because you're paying down the amount you owe faster. But you kind of have to think about that based on your payments and your money that you're getting in. And that will, as Alexandra said, when we talk to you about budgeting, or when we go through good budgeting habits, that's something that will definitely something that we would recommend. So if you decide, you can set your monthly amount, but if you decide in all of this process that you want to go back to school, your loan will then get put back on hold. So as long as you're a full-time student or going back to school, the National Service Center will hold your money again. So I know it sounds really complex. So then there's interest rate options, and I don't know if you're familiar with, floating rate and fixed rate. A lot of people recently opted for a floating rate, and that's where the prime rate, it's controlled by the Bank of Canada. So with a floating rate, you're not really sure what your interest rate will be because it can change, and it can change overnight. But you usually get a lower interest rate if you have a floating rate. But then it's kind of good to know exactly what your expenses are going to be. A fixed rate, is something that you can look at, and it's calculated on the prime rate. And I think when we were going to do this presentation, the prime rate was 6.7. I don't know if that's changed or not, but that's still relatively high to where it has been in the past. But at least with a fixed rate, you fix your payments on that rate and you know exactly every month how much you're going to owe, which makes budgeting a lot easier. So once you decide that, you can't go back. So if you decide for a floating rate, you can always change it to a fixed. But once you go to a fixed rate, you can't change it back. So that's something that you really need to think about. And then so paying it off, right? Um, everybody's student financial situation will be different, and it's really hard to predict what your life might look like after graduation. But here are some tips to pay off your loan faster and resources that if you do end up facing an unexpected situation where your income is reduced, there are ways that you can reduce your loan amount. So you should always minimize what you borrow. So it's not free money. You're always going to have to pay it back. A bursary or a scholarship or an award, that's free money. A grant is free money, but a loan you have to pay back. Create a budget. And like Alexandra said, we can go through some really good budget information at a following session. If you can, pay weekly. Most people do bi-weekly because in the real world, you kind of get paid every 2 weeks. And that will help you pay down your loan a lot quicker, and that will lessen the interest that you're paying. And then look, as you probably do now, look for sales, right? Like if you can, reduce some of your expenses, that's always going to be helpful, because if you have a leaner budget, you can put more towards your debt. And they will give you a minimum amount that you can pay, but if you can afford it, you should always pay what you can afford. So now I think we talk about you can decrease your payments. And I'm just gonna change something here. Yeah, so it's important to remember that increasing your payments, you can always decrease them to suit your budget. Now, if you're living outside of Ontario, the rules get changed. But if you're planning to stay in Ontario, these are kind of the rules that govern that. You can miss payments, but almost becomes a CRA thing, that the National Student Service Center will report to the CRA that you owe money, and then that can result in some penalties, or if you're getting tax refunds or tax benefits, they can take the loan from those things. So there are resources available if you have problems. So there is a 1-year non-repayment period for entrepreneurs. So those are people that are starting their own business, or if you're part of a group of people starting a business, you can put your loan on hold. There's also a 1-year non-repayment period for not-for-profit employees. So if you're working for a not-for-profit and they're a registered not-for-profit, you can also defer your loan for 1 year. And then there's a repayment assistance plan. And so those things are where you can actually apply and show that you've had a decrease in income, and they can reduce or put your loan on hold. And then the last one is the repayment assistance plan for borrowers with a permanent disability. If something happened that you became unable to work, then you again have to provide medical documentation. But the National Student Service Center will review those and maybe either put your loan on hold, or in some cases they can, make it disappear. But those are all sort of extreme situations, but they do exist. So it's important to know that, you know, you should be contacting them if you find it's difficult to pay for your student loan. So then the key takeaways here, college and university is expensive, but we always consider that a good debt because you're investing in yourself. So even though it may seem rather daunting, it's expensive, but it's also valuable. It's going to make your income better in the long run, if as opposed to not doing it. As Alexandra covered, there are so many different ways that you can pay for your education, and no one's path looks the same. Everybody is different, but there are lots of options and resources out there. And make a plan. Like if the commitment to say that you're going to go to school requires some planning. It's a great opportunity and it's very exciting, but you also need to kind of make a plan to make it work. If you do end up getting with a loan, you've got lots of company, because most people do take out loans for their education. There are repayment options. So if you run into trouble, please reach out. And, I think the National Student Service Center will gladly work with you, because nobody wants to see you default. And just, have a budget so that you're paying your bills on time, just like anything else. I know that most people, it comes out, the amounts, people do choose the minimum, but you can be paying. I know people that have been paying for their education, for 10 years or more. So that's not unusual. So if you can pay it off faster, always better. So those are your key takeaways. So yeah, that's it. And thank you. And I guess we're here to have, to answer any questions that you may have.
Yeah, we have some questions.
So I remember a few years ago when I was in high school still, they OSAP did something for people that had like an income under a certain amount, or like their parents made a certain amount where they got more grants, I think, other like above loans. Um, is that still a thing?
Absolutely. So when you apply for OSAP, all of that, all your resources, you're pretty well, it's like a financial profile. If you're living at home, or if you're still considered a dependent, your parents' income will factor in whether you get a loan or a grant, or even if you're eligible.
Okay, and then if you do live on your own, also if you're making under a certain income, like that's also applicable in that situation too, right?
Yeah.
Okay, cool. Thank you.
Okay.
Yeah. Yeah, I just wanted to add that everything is going to be calculated based on your income.
Okay.
Yeah.
If you have been living by yourself for more than 4 years, that you're considered not dependent, so it's going to be your income,
Okay, cool.
and the calculation is going to be based on that.
Awesome. Thank you.
No problem.
Did you want to?
Yeah, I don't remember what the thing was called.
I think, Alexandra, I think it was called an RESP that you were
Yeah.
talking about,
Yeah.
where the age limit is 18 to 20.
Yep. It is
So-
until you turn 21, before you turn 21.
Okay. Okay.
So if your birthday is in June, for example, if you're turning 21 in June, then you have up to May or to apply and open the account.
So if you're 22,
Yeah, you
Yeah.
cannot do it. You cannot do it.
No.
Unfortunately, it's from 18 to 20 or to 21, but
Right.
before you turn 21.
Right. Okay.
Right.
Well, I'm way older than 21, so.
Me too. Any other questions? So if you're connected with the National Student Loan Center,
Mhm.
then are you assigned a case manager who helps you, or do they just do like appointments?
Yeah, Sarah, that's a good question. I think that it's a federal sort of system. I'm really not aware of that they would assign a case manager. Certainly a case number if you were planning on, you would always have an account. So your account number, but you wouldn't necessarily get a case manager.
Yeah, no,
Okay.
no, you won't. I know that I've been dealing with them, and as that said, you're gonna have an account number, and if you need something, just contact them, and whatever representative that answer the call can help you with any question that you may have regarding your loan.
Okay, perfect. All right, thank you so much, Alexandra and Deb, and we're looking forward to the budgeting workshop.
Mhm. So we still
Yeah.
have to book that, right?
Yes.
Yeah.
Yeah.
All right.
Yeah.
Yeah, because
Okay.
they really do go hand in hand.
Exactly.
But listen, there's lots of ways to pay for education. It's not, and if you plan on making the journey, good on you, and good luck.
Mhm.
Thank you.
Yeah.
Yeah.
Okay.
Okay, thank you very much.
All
Just
right.
take the time to make a plan, and I know you can do it. There's lots of options. Thank you for your time today.
All right.
Thanks again.
Have a great
Bye.
day.
Bye.